The stock market is at all-time highs. Bitcoin has been over $100,000 for like 6 months. But there's one investment asset that is surprising people this year, and that is gold.
I love gold!
In just the past few months, gold has skyrocketed not just to all-time highs, but to outperform almost every other asset class in 2025. And here's the thing, most everyday investors that invest in the S&P 500 or other index ETFs aren't exposed to gold.
What about diamonds?
And platinum.
Don't forget opium.
By the end of today's video, you will understand why the price of gold has been increasing so quickly, and in doing so, you're also going to learn about the history of money, a very underrated topic when it comes to investing. And of course, a question that I'm sure is on a lot of your minds right now, we are going to answer whether you should or should not invest in gold. So without further ado, let's dive in. What's up everyone, Brandon from Wealth Potion here, where we discuss personal finance, investing, entrepreneurship, all the great stuff that we should have learned in school, but we didn't. And today we're talking about gold, an investment asset class that is a bit mysterious. You've probably heard a lot about it in the past few weeks or months if you've turned on any mainstream news media or if you follow investing content on social media at all. And that's because of its meteoric price action. It has skyrocketed to all-time highs in spectacular fashion. But before these past few weeks, I'm willing to bet that you probably only heard of gold from your older relatives or that weird uncle that thinks that the world's gonna end soon.
To the world's most valuable substance, pure gold!
And that is because gold is traditionally a safe haven asset. What once was a very boring, old, shiny rock is getting a lot of attention right now. So much so that there are lineups outside of gold stores in many countries around the world. Everybody is talking about gold. And before we break down why exactly the price of gold is increasing, I'm gonna spoil a bit of the ending here because it's very important. Be very, very careful investing in assets that have just had a meteoric price action rise. There is likely a lot of froth and FOMO that you're feeling, and you should be very, very careful in these moments. But again, we are gonna get to that, and we're gonna break down if you should or shouldn't invest in gold a little bit later. First, we have to answer the question, why is gold increasing in price so quickly? Now, the economics 101 answer is that there are more buyers of gold than there are sellers of gold. Every market in the world, whether it's for gold, for stocks, for Bitcoin, for real estate, it relies on buyers and sellers. And when there are more buyers that are willing to buy a certain asset than there are sellers that are willing to sell the asset, then the price is generally going to go up. And one of the most valuable characteristics of gold is that it is scarce. It is relatively difficult to mine or produce more gold. In fact, going back 100 years, the new supply rate of gold is anywhere between 1% to 2% per year, which is again, very, very low. And so again, economics 101, the supply rate of gold is low, the demand for gold is increasing. So again, this brings us back to why. Why is the gold price increasing? Because the demand for gold is increasing. So why is the demand for gold increasing? And this is where it gets really interesting. The short answer is this. The demand for gold is increasing because people and nations are losing trust in the existing financial system. And in order to explain this further, we have to go a bit back in time, something we love doing here at Wealth Potion. I promise, as always, I will make this fun and entertaining for you all. So let's talk the history of money. Money is a very important technology for humankind. It is how we communicate with one another and exchange value. If I want to provide a service to you, you are probably going to give me money. And for millennia, humankind has been trying to figure out what is the best form of money. And we've tried many, many different things. We've used rice, we've used salt, seashells, beads.
Beads.
Bees?
Beads.
Beads?
Giant stones, and of course, we've used precious metals, including gold and other metals like silver. The reason that we used all of these different technologies, including seashells and beads, is because they had a certain set of properties.
The look of it, the taste of it, the smell of it, the texture.
Some of them are pretty basic. They had to be portable. They had to be something that was something you could carry in your pocket or carry in your hands to exchange with someone else. They also had to be verifiable. I had to know that you weren't giving me fake seashells or fake salt. they had to be fungible, meaning that one bead had to be exchangeable with another bead. There shouldn't be a huge value difference between two different beads. There are a few other characteristics, but really the important characteristic is scarcity. There cannot be a way to create a ton more money very, very easily, because then someone's just going to go create a ton of money and then buy out everything in the economy. In fact, there are some very interesting stories about indigenous cultures and societies that used things like seashells or glass beads as money until a more advanced civilization came along and was able to mass produce those seashells or beads. This then flooded their economy with new money. Basically, they were printing money, and then they were able to completely wipe out those less advanced civilizations. And so again, money is very, very important, and scarcity is an incredibly important characteristic of money. And as we mentioned earlier, it was very quickly discovered that gold is incredibly scarce. It was difficult to mine new gold, even to this day. Lo and behold, gold was used for hundreds, if not thousands of years as money. If you play any video games, you likely have collected gold in those video games. And even today, if you go to a local museum, you can likely find gold coins that were used not so far from wherever you live, maybe only 100 or so years ago. Fast forward in time a bit, and humanity starts to realize that there are some challenges with using gold as money. In particular, gold is not super portable. I mean, yes, you can create gold coins, but people that had accumulated more and more wealth, they ended up having a lot of gold bars and coins, and if you imagine Scrooge McDuck, which is a terrible example of how wealth works, but nonetheless, you can imagine some of the challenges that came with storing your own gold. In addition, gold isn't very divisible. If you want to go down to the street and buy a coffee, you're not going to shave off tiny little pieces of gold and then pay for your coffee that way. And finally, it's going to be hard for that barista to verify if that's real gold or if that is fool's gold, especially as more and more technology has made it easier to create things that could look and taste and smell like gold. So at this point in history, we're using gold as money, but it's getting a little bit clunky. Thankfully, we have a savior, the government.
No, God! No, God, please, no! No!
The government comes in, starting with Great Britain, but really led by the United States, and says, hey, look, gold is hard to store, it's hard to divide, and it's hard to verify. We will hold on to your gold for you, and we will issue paper bills that you can use to then exchange more easily. It's much easier to hold paper bills in your wallet than it is to lug around heavy bits of gold. In fact, you might not know this, but if you look at old dollar bills going back to the early 20th century, they actually said on the bill that it was redeemable for gold. This is widely known as the gold standard. It is a standard of money that the US led and spread to many advanced economies around the world, where paper bills were issued that were redeemable for gold. Or to put it a little bit differently, we all got a more convenient form of money. All we had to do was trust the government.
No!
And if you follow Wealth Potion, or if you've watched a couple of my videos, or if you haven't been living under a rock for the past few years, you probably know where the story ends. The gold standard was working swimmingly and contributed to a lot of growth and prosperity in the 19th century. Then we faced our first hiccup in the early 1900s. World War I happened. So the government said, hey, we need to fight this war, so we're going to pause the gold standard so we can print money and fund this war and win the war. Now, as one of my favorite Milton Friedman quotes goes, there is nothing so permanent as a temporary government solution. Now, in this instance, the government actually did go back to the gold standard, believe it or not, but it wasn't very long after that in 1933, where the US government executed Executive Order 6102, which is a very, very famous executive order where they basically banned the private ownership of gold. They basically said, look, remember that offer we said that we'd hold your gold and then you can use our paper bills? That's no longer voluntary anymore. You need to hand in your gold and you need to use our paper bills. Fast forward a bit further to 1944, and this is where the gold standard really gets centralized into the United States. Because up until this point, there were many countries that were holding onto its gold for its citizens and issuing paper bills. In 1944, we had what's called the Bretton Woods Agreement, which is where the US dollar officially became the world's reserve currency, where a bunch of countries got together and said, okay, we're going to use the US dollar for the majority of our trade. And many of these nations gave their gold to the United States for safekeeping. And then finally, in 1971, we had what's called the Nixon shock. The President of the United States, Richard Nixon, temporarily halted the convertibility of US dollars to gold.
I have directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold or other reserve assets, except in amounts and conditions determined to be in the interest of monetary stability and in the best interest of the United States.
Spoiler alert, it's been over 50 years and that temporary halt has not been ended yet. I know that was a lot of history and I really sped through a lot of it. If this is an interesting topic to you though, let me know in the comments. As you can tell, it's something that I'm very, very passionate about and I'm happy to do a deeper dive on the history of money and the gold standard. But I really want to provide that overview today because it's very important to understand the history of gold. In short, gold has been used as money for a very, very long time and much more recently than many of you might think, because the US dollar was tied or pegged to gold until pretty recently. So what happened after the US dollar was no longer tied to gold? We now live in what's called a fiat standard. Fiat, and not the car company, is a word derived from Latin, which basically means by arbitrary order or by decree. And a fiat money is a money that has value by decree. In other words, the US dollar has value because the US government says it has value. I'm oversimplifying a little bit. You could argue that the US military and the US economy is really what backs the US dollar. But it's important to note that it's not backed by gold. You cannot take a US dollar to your bank or to the Federal Reserve and demand a specific amount of gold for it in return. To phrase it slightly differently, the US dollar has value because people and nations all around the world largely trust the US economy and the US government. Now, what would happen if that trust were to decline a little bit?
Fair to say you simply flooded the system with money.
Yes, we did. That's another way to think about it. We did.
You guessed it. People would start to look back to gold. As you know, we try our best not to get into politics here, but I think it's safe to say that the past few presidencies have increased a lot of uncertainty in the world around the health and financial stability of the United States. This obviously impacts investors on an individual level, and we have seen increases in retail buying of gold. But perhaps more importantly is that this is shifting the trust from other nations. Again, going back to Bretton Woods, it was called the Bretton Woods Agreement for a reason. All of these nations agreed to trust the United States. And if we look at some of the data, we can see something very, very surprising. For the first time in decades, central banks outside of the United States now hold more gold than US treasuries. Now, to be clear, this graph has been going viral on X and a lot of other platforms. We have to keep in mind that this is measuring the dollar value of gold. And so because the price of gold has skyrocketed, the value of all these central banks' gold holdings is also increasing. However, if we look past the price of gold, we can still see a similar trend. We can see that central banks outside the United States have been increasing their gold purchases. For a long time, central banks were actually selling their gold. And going back several years, we can see that central banks have been increasing their gold purchases, independent of the price of gold. There's one more really important variable here when it comes to assessing the financial health of the United States, and that is the federal debt. The United States federal debt has just breached $38 trillion, and it is increasing at a rapidly accelerating rate. We talked about this recently on the channel, where initiatives like Doge are maybe well-intended, but they are hardly putting a dent into the massive problem, which is this runaway federal debt. And the United States really has limited options when it comes to paying off that debt. And as I've talked about on this channel, many analysts, myself included, believe that the most likely scenario for the United States government to even attempt to pay off that debt is by inflating away the debt. In short, they will print more money to inflate the value of assets, but debase the value of the dollar slowly and surely over time. So that $38 trillion of debt, while it might go up to 39 trillion and 40 trillion, in fact, I'm willing to bet it will, the dollars that make up that debt will be less valuable dollars, and so it will be easier to pay off. This theory about the United States debt and how they're going to pay it off, it used to be a very fringe, very Bitcoiner kind of view that I've happened to hold for quite some time, but it is becoming quite mainstream. In fact, just recently, JP Morgan put out a paper called the Debasement Trade, which is basically what I'm talking about here. If you believe that the United States is likely to debase the value of the US dollar, there is a certain way that you will want to position your investment portfolio to profit in the long term. And one of those ways is to own something like gold. I personally am a lot more bullish on something like Bitcoin than JP Morgan is.
Number one, I don't care. So just please stop talking about this.
But that's okay. In fact, it is by design. Bitcoin was created to disintermediate the big banks like JP Morgan. Bitcoin aside, it brings us to the important question that I'm sure you're wondering. Should you and I invest in gold right now? Of course, this isn't financial advice, but I do recommend being very, very cautious in times like this. Like I said at the outset of this video, there has been a mad rush into gold. There's lineups outside of gold stores. The Google Trends data is showing that everybody is searching about gold and how to buy gold. So it's very frothy in the market right now. I have this general rule of thumb that if you're hearing about investments from your Uber driver, it's probably too late to get into that investment. Or at the very least, you should wait until the hype dies down. Because like I said earlier, I generally agree with the thesis of the debasement trade. I think it is inevitable that the US government will have to print more money to debase the dollar to inflate away their debt. But that is not going to happen overnight. And as we can see from the price of gold, it has already fallen about 10% as of recording this video from its all-time highs. And that is because there is a ton of FOMO in the market right now. I really like Warren Buffett's advice in situations like this. Be fearful when others are greedy, and be greedy when others are fearful. The underlying ingredients of the debasement trade have been true for years. The right time to buy gold was sadly a few months or even years ago. And although this isn't financial advice to buy or sell gold at this particular time, there are some questions that I recommend you ask yourself. 1. What value would gold add to your investment portfolio? 2. Does investing in gold reflect your outlook on the global economy and where things are going in the next few years? And number 3, and perhaps most importantly, if you were to invest in gold at today's prices and then the price of gold were to drop 20 or 30% like it has done many times in the past, would you feel confident enough in your gold thesis to continue holding that gold even though the price is down significantly from when you invested? Again, these are just some examples of questions you should ask yourself. In short, beware of the hype and understand what you're investing in. And while you're at it, subscribe to Wealth Potion because that's exactly why I created this channel, to explain investing, economics, and personal finance concepts in very, very simple ways so that you can be a better investor and build your wealth faster. And if you're interested in that topic I mentioned earlier around why I believe it is inevitable that the US government will have to print money and they're gonna try to inflate away that debt, you can check out this video here. That's exactly what I talk about on why all roads lead to inflation. Thanks for watching, and I'll see you next time.